Let's get an exclusive chat with none other than Ajay Srinivasan, the Chief Executive at Aditya Birla Capital, and here's his exclusive conversation with Nikunj.
It gives me great pleasure to bring on board Ajay Srinivasan, CEO, that's Chief Executive Officer of Aditya Birla Capital, to talk about what his view on the economy is, how things are progressing for ABCL, which are the businesses which have recovered from the COVID crisis and which are the businesses which have become stronger in this pandemic. Ajay, fantastic to have you back on ET Now. Thank you for joining us. Last 1 year, Ajay, in a sense, has been a year where everything has got rebooted. Like they say in the world, there are decades where nothing changes and there are years when a decade changes. Last 1 year, it feels like a decade has changed. What is your understanding of where we stand?
Yeah, I think overall it's been a year of a lot of change, as you say, and a huge amount of change in a short period of time. I think we've seen tremendous hardship, but we've also seen human resilience of a kind we've probably not had to see before, and we've seen that coming through as well. I think if you look at global policymakers, they kind of front-ended a whole host of response to this crisis, having learned from the global financial crisis. And though people expected the impact of the virus to be probably a little bit more severe than it actually turned out to be, I think because so much was front-ended, I think that has kind of given a big boost to markets, big boost to asset prices. And I think the lockdowns as well have kind of eased, and therefore things are getting back to normal. So I think probably a year of the 3 V's of the virus, the vaccine, and at least in India, the V-shaped recovery, Nikunj. I think all 3 have been very interesting to watch.
I will get into specifics of each businesses, but you're in a perfect place to tell us that how exactly financial services as a category has managed to rebound, because you have an understanding of insurance, AMC, you understand a flavor of retail credit as well as the large corporate credit. How these individual parts, to your mind, have come back?
So I think I'll talk about our business and maybe add a flavor for the industry as well. I think insurance, let's start with insurance. I think clearly a situation like this creates much greater focus on protection of life and health. And it's not surprising. I think we've seen good growth in both life insurance and health insurance. In life insurance, actually, we've grown faster than the industry. I think we were probably well prepared for the pandemic with a large host of digital initiatives in place that gave us a good start even when things kind of locked down. But I think overall, I think the industry has done reasonably well in life insurance. And as I said, I think that's expected in times like this. I see that continuing as well. And as you'd expect with health insurance, I think we've seen very good growth there. We've grown roughly twice this speed at which the standalone health insurers have grown. So we've grown roughly 57% in that business in the 9-month period ended December. I think health has become upfront and center a big topic, and therefore it's not surprising to see this traction in health insurance. And I think you will see a lot more traction going forward with the general focus on health all around us. In lending, I think it was a slower start for us. I think we were a little bit more cautious when the lockdown originally started because we really didn't know what we were entering into. We've never been in this position before, and therefore we were more circumspect as we started. But I think as we got into a couple of quarters, into the lockdown and into the pandemic and had a better sense of what was happening, you could see our disbursement rates picking up, collection efficiency getting back to pre-COVID levels. So I think we've seen that in those businesses as well. Disbursement buoyancy is back. It was reasonably strong in Q3 as well, and collection efficiency was back. So again, not a good place to be. I think recovery has been better than most people expected. And the asset management business, I think, has been a beneficiary of the huge bull run that we've seen in the stock market, and I think general liquidity that is available in the system. So I think that's had its own tailwind as a result of that. So I would say partly as a result of just the environment we're working in, partly as a result of just the digital readiness that we had. I think we've seen some very good growth through this year. We had 2 quarters in the last 1 year, I would say, where where we saw some decline in our growth rates. So the last quarter of the last fiscal and the first quarter of this fiscal were impacted by what we've seen in the market. But I think after that, if you look at Q2 and Q3, we were growing year on year, so really growing back over pre-COVID levels. So overall, I think we'd look back at this whole thing with some satisfaction.
Ajay, if I look at the perception of Aditya Birla Capital's lending business, the general view in the market is that it is a wholesale book, and this wholesale book in a sense ran into rough waters because of the IL&FS crisis. That is not the reality. But how would you defend this image which somehow analysts always are stuck with?
So I'm not sure. I think that image is still held. I think there are a lot of people now who cover the stock, and I think a lot of people who have now seen the traction that we built in retail and SME. But if I just give you a sense of where we moved, we had about 40% of our lending business was retail plus SME back in FY17. If you look at the 9-month FY21 period, that number would be over 60%. So really, we have a largely retail franchise in that sense, much more than we have institutional. Yes, we do have institutional business, and I think we think that that's an interesting area to operate in, especially as we see the capex cycle coming back. And with the credit problems that I think the whole economy faced, we had our own share of those credit issues, but we've dealt with them, and I think we've been able to manage that situation, and I think come out reasonably stronger. So I think as people start looking at the data and as they start understanding the business better, I'm sure they'll appreciate what a retail franchise we have. In fact, across the board, Nikunj, I think we have over 21 million customers. Health insurance business has over 10 million lives that they've insured. Our life insurance business has a very large pool of in-force retail policies. Our asset management company has a very large retail portfolio. We have over 7 million folios that we have in our mutual fund business. And our biggest engine of growth in our lending business in the last few quarters has been the retail and SME piece. So I think you'll see it in the way the proportion changes. You'll see it in the way the margins change, and ultimately in the way the return ratios pan out.
Okay, let's talk about the guidance. It's for the first time you've given a guidance out. I will not say it's a very ambitious guidance, but the fact that you are looking at a marked improvement in ROA and ROE, it has to be a factor of both internal changes and also market share gain. How would you achieve both? How are you planning to achieve improvement in your ratios?
So for the 9-month period, I presume you're talking about our lending business. So for the 9-month period in our lending business, our ROE was about 8.6%. I think this has a number of things in it, including COVID-related credit costs that are sitting in the book. I think over the next 3 years, which is what the guidance we gave to the market with our Q3 results, we're expecting the book to grow. We're expecting the mix to change. As a result of that, we're expecting our NIMs to increase from the current level. So we are currently at about 5%, something in the 5.25% NIM. We're expecting that to get to over 6.25%. So the mix will drive the expansion in NIM. We're expecting some efficiencies in cost and therefore some reduction in the cost income ratio. We're also expecting some normalization in credit costs from a year like this, where credit costs have been high because of the market we're operating in. All of that, I think, will lead to an expansion in the ROA and the ROE getting to the 16 to 17% number that we indicated. So I think it's largely going to be driven by mix, which will drive the yield, the NIM, and therefore that will flow through into the profitability.
A huge advantage your business currently has is the fact that you've got you got 20 million customers and you got a huge backing of the Aditya Birla Group. That is something which some would say is the differentiating factor which other NBFCs and other firms of your size do not have.
Yes, I think the fact that we have a large customer franchise, the fact that we have a huge pedigree coming from the Aditya Birla Group, translates into advantages for us on the liability side. So if you look at our cost of borrowing, I think it remains one of the most efficient cost of borrowing in the sector in which we operate, and that is an advantage that we have as being a non-banking finance company. As far as the 20 million customers is concerned, Nikunj, I think that gives us a very large opportunity to cross-sell. Something else that we spoke about, in the Q3 result after the results were announced, and really talking about it from three perspectives. We look at the opportunity to sell more of our products to our existing customers, and I think we've seen that over a period of time that it happens almost automatically, because as people spend more time with you, they do tend to buy more products from you. So in our asset management business, we have almost like 1.6 products per customer. In our lending businesses, we have almost 2 products per customer. And this is in spite of our customer base increasing. But the focus is to try and see how we can increase our upsell to our customer base. That's one big plank. The second big plank is to do cross-business selling. So to sell to a mutual fund customer, maybe a life insurance product of ours, and how do we make that happen? Given the processes that are required to be followed, how do we get that done? And the third piece, I think, is in terms of partnerships, where I think there's a fairly large opportunity. And I'll talk about a recent product launch we had with Vodafone, which I think is an interesting idea, because they've packaged our health insurance with a plan of theirs. And therefore, when you buy that plan, you also automatically buy a health insurance cover with that. And these kind of partnerships, again, give us the ability to acquire large numbers of customers, and then to be able to do more with these customers over a period of time. So I think this customer base and this ecosystem that you talk about is a very valuable part of what we have at the Aditya Birla Group.
There are two big changes, Ajay, which currently are happening in the financial world. One, financial firms are trying to become Fintech, and tech firms are trying to move towards finance. How do you see things changing? Because the word platform and Fintech is where the market interest is.
So I think my view is that the best model is really a model of collaboration between these two worlds. Because I think when you look at the kind of effort and the kind of platform that somebody like us has across businesses, they're looking at the scale that we've already built across every business in which we operate. I think for us to be able to leverage the nimbleness and the innovation of a startup is a great benefit to us, obviously, but I think it also is a great benefit to the startups who get this large ecosystem and this large scale with which to collaborate. So we've actually launched a specific program. We launched about a year ago, I would say, called Biz Labs. And under that program, we actually identified areas that we wanted to work with Fintech, so that we could work on specific areas with this very, very exciting space in the Fintech world. And we've actually got almost 12 or 13 partners now we're working with in different areas. So some of those may help us in risk management. Some people may be able to help us in customer service. Other people may be able to help us in terms of reaching out to segments that we aren't reaching out to as of now. So I think the space is so wide, you can pick and choose areas in which you can work with them. So I really think this collaboration is going to be a win-win for both people like us who are more traditional financial services players, but also with a very strong focus on technology, I must add. Because for us as well, we realize technology is a very, very important part of what we do. So we will ourselves continuously invent and innovate and up our technology game. But equally, there are fintechs who are very specialized and who do very good work in these areas. I think that combination is really a win-win for both.
Ajay, the jewel crown, some would argue, in your portfolio is the AMC business. It's a business which is growing. It's a business where the natural market tailwind is there, and it's a business which does not need too much of capital to grow. The company has already gone on record and has indicated that they are looking at monetizing that business, or an IPO is coming. Should we look forward to that happening in FY22?
I think what we've said so far, Nikunj, is that we have at Aditya Birla Capital, which is the holding company, we've given the AMC the in-principle approval to explore the IPO. So I think we'll have to wait for how that process moves ahead. I can't say anything more than that at this point in time.
But is that the 5-year view of your various businesses, that these businesses, as they mature, you could be looking at listing your various subsidiaries? I'm trying to draw a parallel here, pretty much like what the HDFC Limited did.
So I think again these are matters where the board will get involved and the board will have a view. And like we said after our Q3 results, I think the board does believe that there's opportunity to unlock value given the scale of our various businesses. And I think we'll continue to evaluate various alternatives that it has. But it will depend on timing. It will depend on each individual business. There are a number of factors the board will take to take that call.
If I do a parallel of similar businesses like yours, the price to book and the market reference point is very different. Are you slightly not surprised but disappointed that you're getting a stepmotherly treatment? Do you think people are not able to understand the true embedded value of your company and the businesses which you currently run?
See, the way I look at it, Nikunj, I think our job as management is to make sure that we deliver the full potential of each business that we have. I think markets will look at different assets differently and will ascribe value differently. We just hope that they realize the value of what we're building over a period of time, because like I've described, I think we have a fairly broad and scaled platform across the piece. We are present in lending, we're present in the investing space through our mutual fund business, we're present in protection, both through life insurance and health insurance. All these businesses, I think, have a tremendous tailwind. I think financial services is directly linked to the growth in the economy. We're very bullish about the growth prospects of India. As India grows, we see per capita incomes rising. And one of the things that happens with financial services, especially retail financial services, is as per capita incomes rise, financial services tends to rise faster than that. So I think given all of these tailwinds that we see, I think there's a long road ahead for us to continue to build value in these businesses.
When we met last, and that interaction of ours coincided with your fundraising. That time, India was recovering from the IL&FS crisis. For a lot of financial firms, the corporate loan book was still not in place. And I specifically remember you said that it is not time to back on the front foot. But do you think now it's time to back on the front foot?
Yes, I think it is, Nikunj. I think the policymakers have done an amazing job in India, and I think globally as well. I think RBI has done a phenomenal job maintaining financial stability and maintaining normalcy in markets. And I think with the last budget, I think very clear signal has gone out about growth being a very important metric that is the focus of the government. And I think with the kind of budget that we've seen, I'm sure we're going to see multi-years of growth. And I think that's really going to help us, get back to the levels that we need, which is the 8-9% growth rates. I think we need to be able to get Indians the per capita income that I think we all deserve. So I'm very bullish, and I think the timing is right. I think this is really the time to be able to grow.
So are we at the big turn for the firm now? Because like I said, last time you said that you were not batting on the front foot. Now if you're batting on the front foot, and given that the delta for financial services is always greater than that of the GDP, and you have necessary capital and risk management in place. So next 2 or 3 years, are we at that big turn right now where growth could surprise everybody?
So when we last met, and the reference point you're making, I think things were as it is slowing down, and then of course COVID hit, and nobody knew what to expect when the lockdowns first started. Nobody knew this playbook. Nobody had a sense how this would play out, how long lockdowns would last, how severe the economic impact could last. So I think it was naturally a position at that point to be more cautious than I am now. I'm now, as bullish as I was, I think pre-COVID, because I really believe that the India story is just starting to play out in terms of economic growth and financial services. I think we have a phenomenal demographic advantage in India, and that is not just a young population in terms of a workforce, but I think now a population that is very tech savvy. And I think that combination makes a big difference, because if you look at a population that is young and therefore a large workforce, but also tech savvy, I think you'll get a lot more traction. I think global liquidity is going to be a strong tailwind for India, and we know liquidity is going to stay easy around the world for some time to come. That money is going to search for a home, and I think India is going to be a natural place for them to look. I think India has taken a large number of reforms already, and I think those reforms will definitely help us grow in a more sustained and more strong way than we've seen in the past. And I think lastly, technology. I think India has really done a great job with so many things, whether it's a payment system, whether it's Aadhaar and the whole identity system. I think we really have a strong tech background and backing today, and a platform that will allow us to leverage a large number of things that we couldn't do before. So I really think that we are going to see very different times going forward, and I am very bullish.
There have been transformational changes which have happened to two sectors in India. One is insurance and second is the entire AMC business. 10 years ago they were relevant, but they were at a different scale and size. Last 10 years for the insurance sector and AMC business have been absolutely amazing. For this decade, if you have to pinpoint the transformational business for Aditya Birla Capital, which one would that be?
Actually, I think you will continue to see growth across the platform that we have, and let me explain to you why that's the case, Nikunj. I think on asset management, I think you're now at a position, like I say, where the product is very well known, accepted, and everybody today knows about mutual fund as an option to invest. That's been one big change that we've seen over the past. I think as the economy grows, as liquidity keeps rising, you will continue to see a growth in the asset management business. I have no doubt about that. So that business will just continue to grow. I think insurance, you're probably referring more to life, and I think life insurance will grow because I think protection has become a very important part of everybody's thinking. And as we all know, India's protection is still low. It's largely been a savings and investment market so far, the insurance business. I think the shift to protection is what we've seen in the past, and I think that shift will continue as we go forward. But look at health insurance, which I think is a relatively nascent sector, still much smaller. But I think with where we are in terms of health awareness and what needs to be done and the out-of-pocket expenses that people still spend on in terms of health, I think you're going to see many years of very strong growth in health insurance as well. So so you pick that item separately. And I think when you look at lending, if India is going to grow 8-9%, which is what we're all aspiring for, you're going to see a very strong growth in credit, and you're going to need the suppliers of credit to be able to fund the people who require that credit to be able to grow the economy at 8-9%. So I think even from a lending perspective, you're going to see a lot of demand for the people who have access to money and who have the ability to manage risk and therefore able to lend out that money prudently. So honestly, it's very difficult to pick out one business because I think each one has something very strong and a strong tailwind that backs it. And I think those tailwinds sometimes are common, sometimes tend to be different, but they all seem to have that tailwind backing them. And therefore, I think you should see traction across the board.
Two more follow-up questions. We've seen massive disruption in the financial services space. We refer to Fintech, but you look at whether Zerodha, which has changed the entire brokerage model. You got startups which are changing the entire insurance model. Do you see there is fear of disruption even in the lending space, or the lending space will still be dominated by traditional players?
So I think you'll see some amount of disruption, but I think at least to my mind in the near future, I think you're going to see the traditional form continuing for some time to come. The scale is just a very different scale at this point in time. I think you've seen the payment space, quite clearly disrupted by technology. You may see pockets like that getting disrupted, but I still think lending is a business in India where you still need to, the physical format is still a large piece, and I think will continue to remain for some time to come.
When you look back and analyze the last 1 year, it's just a coincidence that we are talking to you when exactly 1 year of lockdown has happened. What's been your most joyful and what's been your most painful experience?
I don't have any recollection specifically of joy or pain, Nikunj. I think it's just been a year which has been a bit of a blur. I think the kind of things that have happened, I think the speed with which things have happened, the speed with which we had to adapt to kind of work from home, and then the speed with which we had to make sure that we could open up again and make sure we restarted business, making sure that we could keep our employees safe, through this whole thing, making sure our businesses were up the curve in terms of tech so that we could continue to serve our customers. I think it's been a year of actually phenomenal activity and a lot of learning. And I think that's what I'll be most grateful for in this year, is just the amount of learning we've had and the amount we've had to reinvent ourselves in every way that was possible.
Well, that's been the case for all of us. Really appreciate your time, Ajay, and certainly hope to see much more of you going forward.
Thank you, Nikunj.